into the house.
Welcome back, guys. Good evening. How are you all doing? Uh, well, sorry for the delay. Apparently, very big sorry for this delay of this video. I was supposed to do this last night, which is yesterday night, but I don't know. I postponed it to today. So, uh, this is definitely a Friday market review. And shortly afterward, I've already studied the market and I've come out with, well, I've come out with my conclusion going in next week, which is my next week bias, right? Because every weekend like this, I try to study the market to be able to figure out where am I, um, where is my focus on the price going in next week. So I'm going to give you another video tomorrow. That will be the weekly market review. So which is I'm going to give that tomorrow morning, Sunday morning, before I continue my daily schedule because I really had a lot to do this weekend. So uh, I will begin like this with what I have on my template. So just stick around, and I hope this video is going to excite you to subscribe to this page. Please subscribe. It is not cost any money to subscribe to this account, right? Please subscribe, support me. Okay, that's the way you can support me. Subscribe to this channel, like this video, make a comment here, right? Let me know how you are using this video. Make, give me a comment, all right? So, and thank you for that. And what you're looking at currently is the Euro US dollar daily contract, and goes like this. The Euro US dollar daily contract for Friday, 23rd of February 2024, deliver as projected from yesterday, which is Thursday, as projected from Thursday. Now, it deliver as an insider day bearish candle. Now, I am pleased to see Euro already priced and swept by side liquidity, which is the equal highs open and close candle that will be the liquidity pool. Now, what I'm trying to explain here is what I'm trying to say is that if you look at this candle, right, according to Michael J. Hoddesdon, now when you see a relative equal candle, the body of the candle line close together like this is actually another liquidity point. And because we purge above it and we didn't purge between this sell side liquidity though, buy side liquidity. And also don't forget that last week we were looking at that if we swept this liquidity, we are going to see market reverse if we get to this red line, right? It's a weekly bearish order block. So which I am looking to see that market price into and use it to price lower. But looking at it now, we didn't get to this point, but it's already showing a bearishness, a slight bearishness in this market. Now, I just use this analogy to mark this area out. Now, so if this is the case, then we can now start to if this relative body highs is a buy side liquidity, is a vital liquidity pool, then algo might be seeking sell side liquidity. Meaning if this is a buy side liquidity pool that has already been purged, then we can expect to see the algorithm start to seek what sell side liquidity, which is the relative equal lows below this equal low before this low, right? That since we are on a monthly and weekly ranging market, we might see next week rally lower into this area, then price back into the range. All right. So the highest pool of liquidity right now is this one. If we didn't come for this, we are going to come for this relative uh, buy side liquidity. So we have two potential area, and the one I support more, or where my analysis support more, is this one. That is very clear because we have series of what lower time frame or sell side liquidity that is lying below, which is a potential target for the market. Now, the Friday price was basically ranging trading day. So we are going to measure our point based on what next week. We are going to measure our point based on next week projection and market delivery. Casting forward, we can all see that euro is basically on a large ranging market condition on monthly and weekly. And if Thursday price And if Thursday price delivery is a buy side liquidity sweep, then we can look forward to a short time watch lower price delivery, which is what I just explained earlier. That if this Thursday candle, right, before this Friday, is a buy side liquidity purge that we already sweep, then we can look forward to a short time rally lower, which is this relative what equal lows on price that we are likely to see markets come for, right? Then my daily draw on liquidity is sell side liquidity, which is old low, old old equal lows plus what inefficiency, which is lower time frame inefficiency. So let's go to the XY. So this is the XY daily contract for Friday 23rd February 2024 daily contract. We can see I have marked out the daily consequent encroachment of this week. Right, this CE simply mean what? Consequent encroachment. Right, I abbreviated it as CE, and if I put D on it, that is it's a daily candle week that I'm marking out as the consequent encroachment. So if we are really going to be bullish, we are supposed to right, market is not supposed to go below this consequent encroachment. We are supposed to remain above this consequent encroachment of this week to seek what buy side. And in a short time instance, we have this buy side to look outward, which is previous week high buy side liquidity, right? Which is this week buy side liquidity, which is this is Tuesday buy side liquidity, the week that it just ended this Friday. This is the buy side liquidity. So that is where we are looking forward to. Then there is a possibility that we might deliver lower, we sweep that, then we continue coming back lower on the XY, right? But if we are truly bullish, there is another high chance that we might see this buy side liquidity taking, which will derive us into this volume imbalance, right? Let me put indication to that, the volume imbalance on this chart. So we might likely see price come into this what volume imbalance. After this buy side, we have a volume imbalance here that might lead to what a lower price delivery. Since that volume imbalance is also inside an inefficiency, that makes it a very effective one. So let's go to the daily 4 hourly candle. Sorry, I mean 4 hourly candle for Euro US dollar. So the 4 hourly The Euro US dollar 4 hourly contract shows nicely the price delivery for Friday trading range. On the 4 hour, we can see how Friday trading range rally within a specific price range, creating a short time buy side liquidity and sell side liquidity, creating a short time sell side liquidity and buy side liquidity that we are looking to be what swept if algo is going to be bearish going forward next week, meaning that we create this sell side and buy side, and we are looking to see this buy side liquidity swept before if we are going to be bearish, we're going to sweep it and come back below. Now the only strong PDRA that is going to offset this price move is this one 4 hourly bullish breaker, which is this 4 hourly bullish candle, which is a breaker that is going to you know have influence on this market from going lower. Otherwise, we can see series of trend line liquidity, and these are times where ICT concept intercept what is in condition with what retail concept, and this is a very high probability trading when these confluence are all together at the same time. Now, with the ICT concept, it is with this ICT ideology, it's going to give you high insight on how to what participate in this market. We are not looking to participate when we come lower, but rather we are looking to see a short time buys and liquidity sweep before participating in a lower price delivery. But we should also have at the back of our mind that when price gets below this equal low, which is relative equal lows, there is a higher probability that we might see know a turn back in the market, right? So you can basically project your your whole trade from here to here only going in next week. Although next week is also the end of the month, it's going to be the week that is going to end this February 2024, which we are going to get into a new trading month, which is March. So it's a whole lot, and we're going to see maybe some kind of ranging market next week. And I think next week we also come out. Well, if I'm giving you video tomorrow, I'm going to add the uh, what is it called? The trading calendar. I'm going to show you what the calendar says and what news events we have next week. So I think it's every Friday. I think non-farm payroll is this CPI data. Yeah, CPI data is every first Friday of the month or every last Friday of the month. So I think it's just within this two period of time. So we are going to look at that as well. So casting forward, we can see that Euro has a series of sell-side liquidity in form of what trending line liquidity, which is the major draw on liquidity casting forward, like I just explained. If we are going to be bearish next week, I am anticipating to see the daily candle week consequent encroachment remain on tap, which is this what daily week consequent encroachment. So there is very good to see us sweep below this area, but not to trade above this daily week what candle consequent encroachment. So the 4 hour bullish breaker is another key factor I am looking to hold price if algo is bullish. Having this factor together, it is important to have this it is important to have this on our template to be a guide going in next week. Now, what I mean there is that since we have these factors already in our hand, that there is a bullish breaker here, which might offset the market to go higher. So if you engaging with price, you engage with a caution, and since next week is the end of the week, also another end of the month, sorry, end of the month. So it's also another great factor for you to be very, very considerate when reacting to this market condition. So that has brought us to the 4 hourly contract on what the XY. So on the XY, we can also see we have relatively what highs, which let me not call it relatively high, trend line liquidity highs, which is a very potential very moves, right? A very potential liquidity sweep, and we have this major buy side liquidity as our target next week. Then, if algo is really going to price higher, we can look forward to this. But this liquidity is where our, which is the previous week high, which is this current week high, is where my focus is currently to see market swept it. So we might sweep it and begin to price lower if we are coming for this sell side liquidity. And this is the daily week what cancel consequent encroachment. And if we are really going to be a bullish delivery next week on the XY, I don't want to see um this candle week consequent encroachment broken. All right, and also I want to see us swept below this what swing low to for price or for the market to engineer buy side delivery. So that has brought us to the hourly contract on euro, which is our last time frame. So on the hourly contract, let me take this out. I'll go back. So on the hourly contract, you could basically see that I have already annotated this thing as a sell side liquidity plus equal lows. which is our previous week low that we are looking for on euro. So let's go by the statement. The euro US dollar hourly contract shows perfectly the intraday price delivery for Friday 23rd February 2024 contract. Now the daily profile is an obvious 7 o'clock AM New York local time as the high of the day that priced into the previous day inefficiency and price lower. Now the low of the day is formed at 10 o'clock AM New York local time that swept a short time sell side liquidity and priced back into the um, daily range. Now, what I basically mean there is that this particular candle is formed at what 7 o'clock AM New York local time, which is the high of Friday candle, and that price into this what inefficiency. Now, giving us leaving us with a what a daily inversion fair value gap that's on tap and a 50-minute what bearish order block that's here. If you go on 50 minutes, you can see it very clear. So, what I'm anticipating going forward is that we're going to see market rally a little bit lower on Monday or Sunday opening price. Then on Monday or Tuesday, we're going to we're going to look forward to to price higher and take out this sell side liquidity. Then after immediately this sell side liquidity is taken, we're going to look for a short opportunity, which does not guarantee. Well, trading does not is not 100% probability, but with these whole factors on our hand on at the back of our mind, so it enable us to have the minimum amount of risk and engage with this probability to sell short and target this sell side liquidity and equal lows. Now, on the hourly contract, we can see that we have an ICT inversion fair value gap above Friday high and also a 15-minute bearish order block above the fair value inversion fair value gap, which all these PDRA are basic factors that will result in a sell side delivery if algo is bearish next week. I've already explained that to you guys. Now, also looking at the PDRA that oppose the sell side delivery is the 4 hour what bearish or bullish order block and the daily or ICT inversion fair value gap that has already been tapped and which might not be a very strong driving force in price. Now, let me explain what I just said. Now, this, I call this as the 4 hourly fair value gap, bullish breaker. And if you look at when we tap on this, we go higher and come back and tap on the bullish breaker. So on the hourly contract, it is clearly saying that we have already tapped use, right? Because we already trade into the consequent encroachment of this what bullish breaker. We have already used this bullish breaker already to price higher, right? Before we start seeing a sharp move lower. And also the daily inversion fair value gap has already been tapped with this candle. So there is a very high probability that we're going to see lower price delivery next week. So how far can it go? My weekly profile project for this, then I don't know if it's going to lead us to this the low or this major lows. So but have this low going in next week, and that is it for the daily contract. So this is it for the basically this is it for the hourly contract on euro. So let's go to the XY before our time collapses. So this is the XY hourly contract. We can also see that we basically have same scenario here. We have a low that is but on the euro we already tap on the what inversion fair value gap, which is this fair value gap. I don't know if you can see clearly, but let me just put it. So we already tap on the inversion fair value gap. But although I'm still expecting this liquidity to be pushed, which is going to engineer buy side liquidity, and our initial draw on liquidity will be this high. Then after we see that high pushed, then we can now, if we see if the push is so strong, we can expect to see markets come for this high. So okay, this is the end of the video. I hope it was insightful. Please do subscribe to this channel, like, give me a comment, and see you tomorrow. Right? Yeah, bye and good night.